Hey guys, this is Joe Hammel with the Fire Realty team, and this is a requested video of how to analyze a deal, how we analyze deals. And I'm probably going to do a quick version, which is this one, and then I'll do a longer version where if someone's searching for more detail, more nuance. I can very easily go long-winded, so that video will be very easy for me to do. This one will be a bit harder. Um, so I'm going to try to keep this one quick and just go through how to analyze a deal, pulling the numbers, put them all together, and then a little bit of thought process behind it. So you guys, most of you are watching this, you're probably on like some type of auto search. So here I have them all set up for myself to watch. So you get the one home emails. I got 7 properties that match. Might look through these. One of the first things you're looking for is the 1% rule. You want to beat the 1% rule as soundly as possible. So I'm looking through these and I like this one. It's a 3-1, 1,100 square feet, 110,000. I know rents in this area are 1,400, just because I know that. Hazel Park, I really like Hazel Park, super appreciating. However, taxes are higher, so I know that sometimes these can be hard to pencil out. That one's actually pretty attractive. It's a 3-1. It's going to be big. So we definitely have some good options in here. That one's a good option. East Point I really like. Taxes are a bit higher, so you're usually buying more location than cash flow. I like this one right here, 3-1. It's 1,285 square feet, 114,000. Let's click on that one and take a look. So we click on it. It's a 3-1. Looks updated on the inside. Pretty much, they didn't update this faucet. We still have white. The paint doesn't look bad. I can't see anything too bad here. It's not gonna feel like crazy high. Like we got some use some caulk and some grout cleaning probably. But overall, I mean, it's pretty ready to go. They glazed this, so it would have looked a bit nicer. But again, it shows pretty darn well. Like that thing looks pretty nice. We got a nice, looks like a pretty nice for the most part unfinished basement. This doesn't. This doesn't bother me. I mean, I don't. What bothers me is what paneling, as I like an unfinished basement because nothing can be hidden behind it. But I mean, basements are gonna soak up some water. So does this super scare me? It could be something, and whatever we got going on with this window could be something. But again, we're just gonna assume it's okay. And so this thing doesn't need that much work. So first thing I'm going to do is I'm kind of assuming you're a Bigger Pockets Pro member, rental property calculator. This is, I mean, if you're with Fire Realty team, this is what we're using. It's a really good way to analyze these. So let's start a new report. Address, you can put it in, you don't have to put it in. I have a conspiracy theory where I don't like giving the data to them, so most of the time I don't put the address in. But purchase price 114, closing costs 5,500. Remember, you're probably going to pay close to 7,000 at closing, but that's because you're paying one full mortgage up front. You're closing on October 15th, and you're paying all the way October and November. So the extra $1,500 is just your first mortgage. So 5,500 rehabbing. I always put yes just because I want to put something in there. Maybe if we answered some of those questions we had, we could sell this for a little bit more. Repair costs, it really only needs, it's going to need a little bit. Every house does. So let's put in $1,500. Again, I'll do more explaining of this stuff in the second video. But this one, I'm just trying to go through some of the numbers. So property value growth, I mean, we're at 10% real year over year right now. So to think over 30 years, we can't average 3%. I think we can. So 3% at least. It's probably closer to 3.5, 4. I'm assuming you're going to do down payment of 20%. Maybe you're doing cash, but 20%. Interest rates right now, they're in the 6s. Investors are probably in the 7s. I'm going to get a 7.25 right now, and then in 5 years, 2 years, 1 year, I'm going to refinance down to a 6. So my average over 30 years, which is what this analysis is doing, is probably going to be closer to 6.5. And that's what I want to. That's the way I want to view these properties. Is zoomed out. I want to see what the whole picture looks like. So I'm going to put in what I'm guessing my average of 30 years is going to be. And it's also just a benchmark. I want to keep that number kind of consistent as I'm analyzing deals so I can tell, is this deal better than another one I looked at or not. Points are rolled into that $5,500 closing number I put in earlier, where most of us are doing 30-year terms. Monthly income. So I'm going to go into this a little bit, not as much as I will in the longer version. Again, you can ask your realtor. It's probably going to be one of the quickest ways to get this number because it's a little bit easier for us. If you're using Rent-A-Meter, you can at least type in a number. You can at least type in the address, 3 beds, 1 bath, it's a house, check rents, and it should give you the numbers without having to sign up for any free trials or anything, I hope. Yeah, so it's giving us something. So again, these, you got to take these with a grain of salt. I mean, because they're putting some data in there that isn't good data. It just can't see condition of the house. It can't see, was it listed well or not. So like this bottom percent, this is a rough house, a terrible listing, listening to a family member. You don't know what this bottom percent is. Most of the time, we're, as investors, targeting upper percentile, right? We're trying to make the house nice, and we think we're going to do a good job and get max market rent. So you're pretty much on Rentometer always going to be looking at this top category because that's what's possible, and that's what we should be striving to do. So here it's 1345. I know the area that's pretty close. 1300, 1350, 1400, 1450 are all pretty realistic numbers in this area. Again, if I was looking at this as a realtor, I would go 7051 HUP. You don't have the MLS. This is why I say it might be nice to just ask your realtor and get some more data from them. Go on sold, address, click on leases, go on 3 bedrooms, map. So I've got 1350 for a 3-bed one, bath, no garage, no basement. Our property has a basement, no garage, so we're better than this. This rented out for $1350 in 2 days, and it's smaller, only 1,000 square foot. It is a ranch. People like a ranch, so you can kind of make some adjustments in there. I think, all right, I can at least get $1350 and a $30 pet, so I'm already at $1380. But again, we have a full basement that house doesn't. Here's $1,400. Yes, it has a garage. No, it doesn't have a basement. I mean, nothing fancy there. So I'm at 1,400 here. Also, again, how fast did it rent out? 12 days. That's pretty quick. So market's pretty good there. 1,200 here. Okay, like something. I can't get it to click on it. No basement, no garage. It's small. Nice enough. So again, I 7 days. I think Julie Zoo just didn't do a very good job getting their client the max market rent on this property because I think they could have got more than 1,200. I think that was a little bit of. I don't think they did a good job. $999. This is half a duplex. That's a duplex. This is half of it, so it's not a good comp. So I won't use that. So again, we're at 1,350, 1,400. Add a pet fee. I mean, you could really easily put in 1,430 for this house if you wanted, which I'm tempted to do just because you buy it now, you're going to be renting in the spring. 1,430. Make the house nice. Put that $1,500 into it, make it nice, do a good job renting it. I think you can get that. It's a little bit lower. Annual income growth. Every year, you should be pretty much increasing your rent 3%. You don't have to do that. I do it on sometimes. I used to do it more. Now I'm like, I don't necessarily need the increase in revenue as much. I'd rather just zero issues with my tenants. Just keep it. I do 1.5% a lot. Property taxes. Okay, so this one is going to be one of the trickier pieces for you. So you're on here, you're looking at the property. Last tenant paid $1,450 in rent. There's another piece of data. I mean, I gotta assume. Well, my SEV is $30,000. It doesn't really matter. This number isn't accurate whether you know if it's homesteaded or not. But as long as you have this number and you know it's 2024, you're going to come into property tax estimator Begin property tax estimator. County, we're in Macomb. City, we're in Warren. School district, come to the house. Where's it going to tell us that? Somewhere in here. Unified School District center line. Okay, so we put center line in here. Center line, search. To estimate property taxes paid by the current owner, enter the taxable value. For future owners, enter the SEV. So what it's telling you is that if you want to estimate your taxes, you're using the SEV. And now this number can move. So in 2025, it's going to get a new assessment. So most of the time it goes up. So you use this number to estimate next year's taxes, but yes, they're going to increase. So I forget what that number was, something like this. So if it's an investment, 2,101, principal residence, 1952. It's usually a bigger gap. Again, the numbers, those millages are really close. What it is the homestead millage is high for centerline public schools. Usually a homestead is going to be like 25% less than non-homestead. So anyways, that's just how centerline is. Our property tax for a second home, 2,101. That's cheap. This thing's going to pencil out nice. So 2,101. You can go round it up a little bit, 2,200, because it's probably going to go up a little bit. Insurance, again, another one that's just tricky. You can call your broker, your insurance broker, if you want a quote. All of my properties similar to this are under $60. I got a lot of $50, a couple 40s per month. So I'm just going to tell you on a house like this, you can probably put in $60, $65 and be fine. Hopefully you're getting cheaper. So $60 in there. Repairs and maintenance. This one's always tricky. You kind of got to go off of, you can go 333, 555, 777, 1010 is never going to work. But you're trying to base, like, look at this thing, is it going to need a lot of maintenance and stuff? Again, this is over 30 years, so it's going to need things, but it's like, you can kind of skew them down a little bit if you're like, all right, it seems pretty maintenance free to beginning, or if it's like, I'm buying a fixer upper, renting it out, rent ready, not necessarily doing a lot of things. It's like, I can't see the furnace. I can't really tell if those are good windows or not. So again, just to be throwing out a number here, 555 is typically what I'm going to put in a report. That's 15% a month. I'm saving for repairs, CapEx, vacancy. That's what, 140. That's $210 a month that I don't count towards my cash flow. End of the year, that's $2,500. That pays for a furnace every year. I mean, that should be pretty close. Could be cheaper, could be more. It should average out over 30 years. So 555, I feel okay with that. Management, ideally you're self-managing. That's going to make these deals pencil out a lot better. If you're using a manager, there's definitely, I know Brad Cohen will do 8% for Fire Realty Team clients. There's a couple other that are flat fees for 100. So, again, maybe you're going to go with one property manager in your first property and pay 10%. But as you build a portfolio and you have 10 properties, you should be at minimum negotiating down to 8% on your 10 property portfolio. Electric, single family home, you shouldn't pay it. Tenant pays it. Gas, water, tenant pays it. Garbage, tenant pays it. All that stuff. Expenses growth, annual expenses growth. Technically, it's inflation. Property taxes. I'm going to match my other numbers, 333. Sales expense, you're usually looking at 6%. You got 3% to your selling realtor, 3% to the other realtor, 1.5% to 2% for taxes and transfer costs. So 7.5 to 8 is a good number. 8 if you want to be more conservative. Finish analysis looks pretty good, right? $281 a month, 11.34% ROI. This is on the MLS. This has been on the market for one day. If you like this deal, call your realtor. That thing is, just lost it, but yeah, this is first day on the market for this thing. So, well, I guess I don't know when you're watching this video. It's December 13th, 2024. So, And then if you want to go share, download PDF, this is how you get it to look really clean. You're talking, it's a 9 cap, $287 a month, 11% cash on cash ROI. This is as good as deals gets right now, right? I mean, like, it's 2024, numbers are squeezed, low taxes on this thing help, beats the 1% rule by a lot. It pencils out really well. I mean, look at this thing over time. Cash on cash ROI after 30 years is 60%. I mean, property value, in 30 years, you're going to have a $283,000 property paid down to zero, and you're going to make money every single month. Total cash flow, making $1,000 a month off this thing in year 15. I mean, don't get focused on year 1. Look at year 3 through 30 plus. Okay, one more thing though. We got to go total ROI, right? Because don't even focus on cash on cash, any of that stuff. Look at the total ROI. So our sales price. This is another calculator. We'll share it with you. This is ours. Fire Realty team. Matt Bora helped get it going, and then we customized it a little bit to make the best sense for us. So 114.31. I think we put in 1430. Again, if you could put in a lower rent and be a little more conservative if you want. Property taxes, we had them at 2,200. Insurance, we had them at 60, 65. Kind of forget. Management, we had 8. Vacancy 5. Maintenance and CapEx, we had at 10. Interest rate 6.5. Closing rehab costs. Notice this is closing plus rehab. So we're 55 plus we put in 1,500. So 7,000. Our ARV, I think we bumped that up to like 117, which is pretty insignificant in the scope of things. And now we've got our whole number. So ROI 11.33, that matches. But then this is where you got to look at. I mean, you got to focus on these numbers here. Total ROI is actually 34%. Our cash flow, that ROI of 11% is just on cash flow. So you got 11% cash flow ROI. Then you've got debt pay down, because remember, tenant is paying your principal. So that's also money in your pocket. It's just not, it's money in your bank account, not in your pocket. So you got 3.5% ROI just on that. That beats most stocks just on principal pay down. Beats a lot of stocks. Tax savings, you got a ton of depreciation with real estate. You're making money because of what you would be taking in taxes on other income versus what you don't pay in real estate. You got solid ROI just on not paying regular straight line depreciation. You can actually make this number a lot bigger with doing a cost seg and accelerated, but that's another 30-minute video. Appreciation, 12%, just because of leverage. You bought a $114,000 house that's going to appreciate 114 up to 117, 118, and you only put down 20%. So you're making 12% just on appreciation through leverage. So 34%, and this number just goes crazy as time goes on. You'd go look at this house, and if you like the house, you just close your eyes and pull the trigger. I literally own 20 of these things, and they work. You're gonna have ups and downs, but again, make sure that the windows, make sure the walls aren't caving in and there's not a bunch of other unforeseen issues. For example, maybe it has a clogged sewer line and now you have an additional $3,000 rehab. Well, then you'd have to put this in a report and see how it pencils out. But I think that's it. That's 20 minutes later. That's the short version on how to analyze a property. Let me know if you have any questions. Hopefully it helps. Again, reach out to your realtor, firerealtyteam.com, and hopefully we can get you rolling.